This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So the gold market again. The gold market yesterday has shown the probably the most interesting action, except maybe the Japanese yen. At least both of them, the gold and Japanese yen, has shown the nice action. Well, Japanese yen has hit our target. The gold market has shown the price action that we have warned about previously, because yesterday we said that probably could be the bullish stop grabber, but the price action suggests the appearing of the bearish dynamic pressure. In such circumstances, that's, by the way, the guys, the reason why I do not want to trade the stop grabbers of that sort that stands against the major direction, because they always has the risk to be caught up by the opposite dynamic pressure. So if you trade the stop grabbers in the direction of the trend, it's not big the probability, and in fact that is probably impossible that market will show the opposite dynamic pressure when you trade the stop grabbers in the direction of the trend. That is possible, but usually this it's more simple to catch this moment. But when you look at the stop grabbers that stands against the major thrust, that's the really larger and more significant risk that you could be caught up by the opposite dynamic pressure. That has happened. So we have the bullish pattern and we have the bearish dynamic pressure. And you can see that market in fact has erased this pattern. That is what we are talking about yesterday. That's why I said, guys, that I do not like this pattern, and probably I will skip it. Will not trade it. Well, now what we have, the minimum target of the bearish dynamic pressure, trend has shifted bearish, by the way, is the nearest extreme at minimum. So market, of course, could continue move lower, but the minimum target is right here. And in general, the gold habit assumes that this level should be taken out, either as the washing greens just washed out and returns right back, or by the downward continuation. I have checked another possibility, guys. Could we, for instance, get here the free drive? Well, by the shape, maybe it will take the shape some sort of the free drive, but the ratios not quite hold here. So this low is not quite, not even the 127 of that swing, and 1618 of that swing stands much lower than the 127 will be of that swing. So that's a bit skewed, not quite perfect from the harmonic point of view, free drive pattern. That's why it's better to call it as the wedge if market will just show another move down. But I suspect that these lows could be taken out by the price. That is suggested by the bearish dynamic pressure. Well, on the 4-hour time frame chart, you could see it even better. So that lows, it's very difficult to assume that the gold market will leave them behind and just turn to the upside. From that standpoint, I do not see much what could be done here on gold, and I already have announced and have told about my warnings about the long weekend, and we have in fact the 2 sessions till the October 17th. That's why, guys, think about the contract to maybe close your positions, contract your presence on the financial markets within this period, because that really could be very expensive, because I can't exclude the possibility that some breaking news could be issued, could be released within the weekend. Sometimes this happens previously. Well, that's really could happen. Well, and currently on the gold market, in fact, I do not see much to trade, except maybe this possibility for a brand body sell or something of that sort, because that thrust in general not perfect because of these really long shadows to the upside, but that probably could be acceptable, especially if we assume that taking out of these lows, that market should show some sort of the brand body sell. Maybe we will see the retracement to the 13 even, somewhere in this area, when the market could show then the continuation taking out of these lows. That's one of the short-term scenarios, but I suspect that market will not have enough time to complete it today, because that is 4-hour time frame chart. It needs at least 4 or 5 candles to complete this, because it should first complete the retracement and then start to the downside. Well, on the hourly time frame chart, you see that market has completed the butterfly. Why this bounce up is now starting, but this butterfly already has worked out, because the market has hit the minimum target, the 3-8 retracement, 1293. But as we expect some deeper move, maybe to see some brand body sell, I can't exclude that market will show the compounded retracement right to the 618. So that's 1301. We expect 1299. That is confidence resistance will be on the hourly time frame chart. From that swing down is 618 here and 38 from that swing, so that's confidence resistance. If we will measure even the potential ABCD retracement, if we will get it, so right there. So you can see this could be, for instance, an ABCD agreement at the confidence resistance on the hourly time frame chart, on the 4-hour time frame chart, and that is the very short-term setup that probably might work here. Well, because I really suggest that market will take out of these lows. Whether it will continue to move below it or not, I do not know. But as the gold market is a very cunning market, and it's very rare happens when market just leaves behind some significant and sweetie stops that have been placed here. So I think that market will make another ride right to this area and grab the stops here when it will finish the retracement. That's very short-term setup. I do not want even to talk about the long-term forecasts and what will happen after the 17th of October. Just do not want to spend the time on this. So let's be focused on the current setup, on the short-term setup. If you think that this could be interesting, you could try it. But again, guys, it's not too much time right to the October 17th, and be careful with any trading right now.